Brought to you by IOCO, Africa's leading integrated technology services company. Technology, friend or foe? By 2040, Siemens expects up to 40% of all South Africa's mining machinery to be autonomous. This is good news for safety, efficiency and productivity, but what does it mean for the industry's labor market? Business Day's Mudiwa Gavaza joins us with greater perspective in this week's edition of Tech Talk. Mudiwa, thanks so much for your time this afternoon. So digitalization, a big theme in the mining sector. Talk to me about, how these technology advancements can make mines easier to operate.
Good afternoon, Ntaoleng. It's a very interesting one, especially just after the country was so focused on the mining sector last week when it comes to the mining in Daba, to have a look at what's happening in that sector. Now, when it comes to debates around the use of technologies, AI, robotics, automation, that type of thing, there's often a huge discussion around, are the machines coming to take our jobs? And there's often an effort to say, no, we're going to coexist and all of this. But the mining industry has taken a completely different stance to other sectors, because mining is one of the few industries that has almost made it part of their strategy that we are going to be reducing the human element in favor of technology as much as we can, especially for some of the more high risk environments. South Africa, for example, has some of the deepest mines in the world. And if anything, if people are going to go through some of the chat that's been happening over the last couple of months with people underground, that is not the best environment for people to be in. So mining has definitely been one of the industries that has been embracing to say we need to reduce the human element, especially when it comes to operating in those really deep and dangerous areas of the mining industry. So lots of automation, and South Africa is seen as one of the countries that's at the forefront of that particular charge.
So safety concerns right at the top when we talk about technological advancements, but we do know that these machines cannot operate themselves. What's the progress looking like when it comes to reskilling some of the people that work at these mines?
It's a very interesting one, and all of this is based off of research that has come out from Siemens, which is a big industrial technology company. About 20 to 25% of their business in South Africa is around the mining sector. So, these are people that know what they're talking about. And interestingly, they are one of the companies that actually makes control systems for some of these, autonomous machinery that we're talking about. And one of the things that they were talking about is to say that there's a huge effort right now to try and reskill people, because you can at least get people that have experience actually being underground, and then you retrain those people to operate the same machines that are going to go underground. So at least you have people that have context of what the machines need to do and how they need to operate underground. So that's one of the big areas, where people are being taught when it comes to the digital skills and the reskilling. But one of the things that admittedly is there is that because of that, right, your machines are actually going to end up doing more work than a typical human being.
Yeah.
So you can't reskill all of the people that would have been underground. You have to find somewhere else, to put people. And one of the ideas that's coming through in the sector is to say, huge conversations around let's do beneficiation and that type of thing, or right, and maybe that can be we can then open up those industries and those companies as being areas where you have people that used to be underground and used to be some of these roles being moved into, these adjacent industries. It's fresh industry, so you're not taking anything away from people, but you are opening up, new investment, you're opening up new opportunities. So I'd say, to answer your question, those are the two of the big issues, or the two areas that people, are saying, perhaps we can tackle the problem from that point of view.
I can imagine striking a balance could be quite difficult, because we're also seeing it playing out in the mining industry, where we have, calls to close down coal mines. But then you have to think about the community and the people that work there that are going to lose their jobs. I want us to touch on the manufacturing aspect of it all. I can imagine building and operating these machines is quite expensive. I also think about, soaring electricity prices. That, of course, also presenting a risk, right?
It definitely does. And once again, all of this stuff does present an opportunity, right? Because as you're increasing the amount of machinery that's being used in your mining operations, it means that there's an industry that needs to be scaled up. And to your point earlier on about the balance, right? It almost feels as if, as you are, pushing forward in one aspect, you're
Yeah.
almost taking away, from another aspect. So when you are increasing use of machinery, those are jobs to put together that machinery. Those are jobs to program those machines. Those are jobs to actually operate the machines. Those are jobs to maintain the machines. Those are jobs to make sure that people are being trained in there. So you're opening up that opportunity. But to your point, you're taking away possible roles. So I think the community engagement that the mining industry and adjacent industries are going to have to take with communities are going to need to be different, to say what used to be, what is the future of a mining town, a mining region, right? People that would normally have been trained to go into those industries, how are we taking those people but putting them into some of the opportunities that I've just mentioned now?
I want to look at perhaps, the bill that could rise when using these technological advancements, when, acquiring the machinery. I remember reading a headline that said Kumba is investing over 11 billion rands on technology advancements, which would boost outputs at mines. Are we seeing that as a growing trend across the miners?
Definitely a growing trend. If Siemens research is anything to go by, then South Africa is going to be, one of the countries that is at the forefront of this type of investment currently and into the future. When we look at countries that have done well, Australia is looked at as the example. So if people want to possibly see where South Africa is going, have a look at what's happening in Australia and the level of investment that's happening there. The other one to think about when it comes to costs is that this push and pull, giving and taking thing that we're talking about just now, it comes into play now because as you increase your technology investment, right, on the one hand, you are also commensurately reducing, perhaps not proportionally, but you're also reducing the amount that's spent on human capital, right? So at the end of the day, one would have to do a proper calculation to say that what is the net effect of these things, perhaps in 5 years time when we get to a 2030 or a 2040, what is the amount that has been spent on technology, versus the amount that's being spent on human capital, because that then gives a sense, at least when companies are reporting, on what the overall expenses may look like. And that would be an interesting trend to watch as the mining houses are reporting their results, in the coming years to say, does the technology actually increase the efficiency where you reduce human capital? So because the thinking is you increase investment in technology, but that technology is doing more in terms of output than the human does. So do you end up having cost savings and possibly increasing that profitability?
Mudiwa, thanks so much for your time and just sharing those insights. That was Business Days, Mudiwa Gavaza. brought to you by IOCO, Africa's leading integrated technology services company.